What's up, YouTube? Welcome back to another video here on the BitFunny channel. My name is Zay. We're gonna go over. Sorry. My name is Zay. We go over crypto analysis. We talk about Bitcoin, Ethereum, other altcoins. We sometimes tap into the S&P 500, but that's neither here nor there today. We're just gonna do a analysis video and just go ahead and tap in and see what the charts are telling us, what's going on in the market. And yeah, we're gonna have a great video. Today is Wednesday, March 19th, 2025. It's currently 7:49 a.m. We are looking at the price of Bitcoin roughly around $84,000, and we're gonna go ahead and dive into it. So as you can see, price is somewhat respecting our mid-range, which is right here around 80K. If I can just drop this down right here, if I do a horizontal line, like a dash line, I really don't even like to have the lines on here because price enters a range more so than just a specific number, right? So if I have 80K right here, this is like the average of where price has decided to touch. Sometimes it came here, which is at 81.5. Sometimes it comes here at 78.1. Sometimes it even wicks below and gets down to 76. But nevertheless, we are still inside of a box, which is a zone, a range, right? This is the zone right here where price has decided to touch. So, I like to just eyeball it and find an average of, all right, in between the highest point and in between the lowest point, where has price decided to, really congregate as the average. And it also helps when you use round numbers, it's just a better way of gauging where price could go, where price could touch, and where it may typically respect, right? Now, I learned that early in my trading career a couple years ago, but I'm just gonna draw the line today just so y'all can have like a visual. This area right here, I've said it for weeks now. I do not respect this 80K area. Why? Because it hasn't shown to be a key area of support. We've only had it interact literally one time before this, this consolidation right here. And that was November of 2024, November 11th of 2024. And it barely did that. It just broke through. So really, this is the only real deal interaction where price is kind of like, okay, testing it, doing X, Y, and Z. So I'm not gonna take this like this one time over the numerous amount of times that price has decided to touch this 70K area, right? This is 1, 2, 3, 4, 5, 6, 7, and I'll say 8, roughly 8 times price has touched just in this instance right here. If you even want to go back, you can count this as another time, right? Just because it's so close. You can consider this 1 for sure, maybe 2, because it's still a zone, but still, this interaction right here was pretty evident. It was clear that, all right, this 70K is used as resistance right here. And if we just look at the time frame in which price interacted with it, is around or roughly 250 days of just trying to get above this level and holding it. It couldn't do that for 250 days. How many days are there in a year? 365. We know this. So 250 compared to, my fault, 20 days. Which one you think holds more weight? Of course, we're gonna go with the 250 days just because of the larger number. So that's why I continue to state that, all right, somewhere in this area, I believe that price may have a better chance of bouncing just because it was used as resistance for 250 days, right? Whereas this area, only for 20. So I'm gonna go ahead and delete this because that's not really my zone that I see. And I haven't really been using I haven't been using any indicators in my previous videos. I think today I might just, throw some on just to see where price, what the indicators are saying, and seeing if that lines up with my thesis. So we're gonna go ahead and dive into it. The first one I like to use is really the EMA ribbon. Well, it's no really first. It's just one of them I like to use is the EMA ribbon. And as you can see on the daily, we are below the EMA ribbon, right? So when you're below it, this serves as resistance, right? As you can see in opposed to when it's used as support. So when you're on top of it, once you break through and you're on top, You see price comes down, it touches here, boom, rises. Come back, touches here, boom, rises. Touches here, rises. Touches here, rises. Even touches here and still rises, right? Until you break below. And once you break below, resistance, resistance, resistance. All right, and so right now we're just, the daily EMA is going to be basically used as resistance because we're on the trend of going down, right? So the last 1, 2, 3, 4 times, really 5 times, you've seen price go down once it touched this. That theory is going to hold the same until price decides to just shoot above it, or it does it with some type of conviction, right? You see these candles right here, it gets above with some form of conviction, right? If you start here, go all the way up here, it rose for about 21 days to get above this EMA. Now once it got above, it tested, tried to get back below, but it really didn't hold, and we continued to shoot up, right? And once you're above it, I'll test it right here. Once you're above it, you can set this, see how long it took. So we stayed above this the EMA for 65 days, and we trended for 75%, which is approximately $5,000 or $4.6 thousand, roughly $5,000, right? Once you're above, and when you're down, you get the opposite. So that's one reason why I still believe that this is bullshit. I'm sorry. I'm just keep it real. That's bullshit. I don't think price is going to break above just yet, right? Another indicator I like to use is the Ichimoku cloud. All right, when this cloud is green, it basically indicates that, all right, this is used as support. Once it turns red, it tends to be used as resistance. So currently, this big cloud right here that typically is used for support did not hold support this time, right? We broke through this cloud. So now we can hypothesize that if we come back up here, it's a likelihood, there's a likelihood that we may reverse and come back down until we get here, so we can load up and shoot back up. But in the meantime, I do see price coming back down here. And once it does, I'll be, you know what I'm saying, doing what I do, enter, you know what I'm saying? Y'all know, if y'all been watching the videos, y'all know what I'm gonna do. So that's just on the daily. I also like to use, you know, maybe a 4-hour just to get a little bit of clarity as to what's going to happen today, seeing if I have any opportunities to make money today. So the EMA ribbon is because price is consolidating. I keep saying Ichimoku. The EMA ribbon is not really useful right now. It's not giving us anything. So we're just gonna cut that off. We're gonna go Ichimoku. Now you can clearly see what I'm talking about. Here, if I just look over here, support, support, support. You see what happens when we bounce, support, support, support. All this was support on the way up. But once you break back down, it doesn't really hold as support. It is used as resistance, as you can see by the red. Resistance, 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 resistance. Breakthrough, but still resistance. And it looks like now heavy resistance. So if let me give you this. If I was really, really aggressive today and I was like, yeah, I really want to make some money, I would look at this right here. I would say, okay, cool. I see that price is entering a red Ichimoku cloud on the 4-hour. It looks like this is somewhat of a key area just by the amount of times price has interacted with this area. So I would draw back my line. Oh, can't enter here. Why can't enter a line? Oh, because I'm drawing. I would look at it here. I'll be like, okay, cool. Let me draw that line back. Now, because price is like somewhat consolidating, I wouldn't trade it just yet. But I do see that this bounce right here is like curving. It's not really shooting up. You know price is at a good area, and you know buyers are in once you see price dip below like this, and it recovers just as fast, and it takes up all this. That means whatever market it is, in this case Bitcoin, that means Bitcoin is extremely bullish. And this move right here would sometimes, more likely than not, give it enough power to just break through a resistance zone, right? And so people will see this, oh shoot, they'll start to enter up here, FOMO in, probably get wicked out instead of waiting for the pullback at this key area and now be used as support so we can continue up, right? We're not getting that. I say all that to say we're not getting that. We're getting more so of a slow, choppy recovery, meaning that buyers, or there are not a lot of buyers in this market right now. It looks like it's trying to get some buyers, but ultimately I do see us coming back down, or we also have the opportunity to get enough buyers and come back up here. But if we do come back up here, this momentum right here, I don't think is enough to get us above here, because we didn't do this. It wasn't a V shape. It was more of a slow rounded, and then I'll be looking at some short positions right here, because we're not getting enough juice, not getting enough power. So then I'll see us coming back down, right? So the market, of course, has two ways to move, up or down. Right now it's just moving sideways. If I can just draw that right there. Really chopping around sideways, not doing much. Okay, cool, I'm chilling. But that's if I'm super aggressive. If I see us create a wick like this, hold on, like something like this, and then close as a strong bearish 4-hour candle, I'll probably set my stop loss like right here, probably get an entry somewhere right here, and I'll just take it all the way down here. That's if I'm super aggressive. Right now, I'm just more so chilling, more so conservative right now. The old me, I would definitely enter that just because I'm greedy, just because I want to be in the market and attempt to make some money. But the whole time, I'm losing that motherfucker because I know I'm not supposed to be entering. So, this, what I see right now, I also have Ethereum. Like, look at Ethereum. This is something I will also do in my previous, my younger self. I see Ethereum is bouncing off my support area. Like, okay, cool, I'm loving it. I see this, boom. One thing about it though, I'm not fully convinced for a couple reasons. I'll give you them right here. The S&P isn't 100% bullish yet. Like, that is a V-shaped correction and we are coming back down, but I need to see more. I need to see more of a recovery. I don't know if this is let's fake out here and continue to go down and grab some more support. I don't know yet. That's one reason why I'm kind of weary. Two, Bitcoin. I told you we're not at a key area for me personally. Therefore, I'm kind of hesitant right now. I would have to see Bitcoin break through this area with some conviction and then come back down in order for me to be bullish on Ethereum, right? So what I'm predicting or what I'm seeing right now is that, okay, cool. Everybody sees, oh man, Ethereum's about to rise, Ethereum's about to go. We get something like this. We look like we're going up and then we wick down and then we come back up and grab some support here. So now that just solidifies like, okay, cool. We tested, we broke through this area. We saw that price was extremely low. Price came back up and it tested this area again. Like, that is just the ultimate confirmation. Like, all right, cool, I can enter here. Right now, this is not enough for the simple fact of, let me show you. Like, look how much time that we just spent down here. You know what I'm saying? We spent 8 days down here. 8 days. That's it's not enough for me. And really and truly, through that 8 days, we only got up, until today, we only got up 10%. Like, that's nothing. That's bullshit. You know what I'm saying? That is nothing. We traded inside this range for nothing. You see what I'm saying? Like, once you see moves like this, okay, people are buying. Then you see we cannot like break above this area. We tried for the longest. We tried for as long as roughly estimating around 20 something days, 20, 25 days, right? Once you see prices ready to roll, you see something quick, man. You see something like this. All right, we get down, wicks, wicks, wicks. Let's get back above, right? Oh, let me press one thing. We trying to get back above. See, 4 days to get back above here. And it's not even the best because we didn't even break through. I got to show you something where we like really break through. Like, look at this. Not even break through, but we test. As soon as we, okay, this is a key area, boom, boom, boom. I would say right here where price decides to slow down a little bit. It took us 6 days. It took us 6 days and we got as high as 3.8K, which is a total of roughly 35%. That I just showed you might have been 10%, which is nothing. You know what I'm saying? So if price is ready to move like this is showing that buyers are in. Wicks show buyers are in or sellers are in. There is no wicks right here. This shows me nothing. That, okay, cool, we finna fake y'all ass out again, get back down here, then the real people buy up, boom, we're gone. So I'm gonna end this video like that. I know I've been yapping for a little minute, but moral of the story is still be patient. Or I'm gonna be patient. You can do what you want to do. This is not financial advice. This is time sensitive, you know, information that I'm giving y'all. So y'all just go ahead and use it for entertainment purposes. Do what you will with it. But I'm really gone, man. I done said my piece. I hope y'all have a wonderful, terrific day. Beautiful day. It's a beautiful day outside. I'll catch y'all on the flip. I'm gone.